Hello, Jim here. Would you like to retire way earlier than you ever thought possible? Well, today I want to talk about how you can potentially do that and how I've actually done that. I'm going to share with you how you can trade what I call safe option strategies. Just a few trades each week can make a big difference in your retirement income. I'm going to share with you my strategies, how I use what's called the option wheel in a safe manner to really generate a ton of income. And I'm also going to share with you my retirement plans. I'm soon going to be 59 and a half and I can access my retirement. I'm going to talk about what my plans are once I reach 59 and a half, and then also when I reach full retirement age at 67. So stay tuned. I think it's going to be well worth your while. Let's jump right in. I've been on a journey to learn the right way to trade options. I've been trading options almost 15 years. I started probably for the first 11 years just selling covered calls. I didn't know what I was doing, but I did earn a really nice income. It was probably five, six, $700 on a monthly basis. 4 years ago, I decided I wanted to dig deeper and learn the right way to trade options. So I started with more strategies. I started trading puts. I started setting goals. My first goal was 1,000 on a monthly basis. I reached that literally the first month. Then I went to 2,000, 3,000, 4,000. Recently, I've reached 8,000. So on a monthly basis, just with options premium, I'm trying to earn at least 8,000. That doesn't include other types of income like interest and dividends. Along the way, I learned that it really is truly a journey. You don't just jump into trading options and start at a high level. You kind of have to learn. You have to learn the ins and outs, the way to trade, the all the different ways of measuring the risk of a trade. Picking the right durations, picking the right types of what's called deltas, meaning how much risk do you want to take on a strike price. So learning those things made a big difference. Now, was it difficult to learn? I don't think so. I was able to pick it up quite a bit. So one thing I suggest to people is start small, kind of pick some goals and learn the basics, and then increase your goals. A lot like I did. I kept it really simple. I just used on a monthly basis what I wanted to earn. Later, I started measuring the trades. I started identifying trades that were better, that I could potentially put more contracts into and earn more money. And that worked out really well. Now, recently, I've had a lot of members join my membership. If you want to learn more about my memberships, look in the description for this video. I set up what I call my safe wheel strategy. So for people with small accounts like 10,000 or 25 or 75, they can use these specific wheel strategies for those size accounts. And what's been really amazing is you can, with a small account, make really good money. I'm going to share with you at the end of the video what that looks like, as well as I'm going to share with you my retirement planning worksheet that I use to guide my planning both budget-wise and then also my plans for when I want to retire at 59 and a half, which literally is 2 months away. And I'm not going to truly retire. I'm still going to be working some. But again, having all this extra cash coming in gives me financial independence. I can do what I want to do with who I want to do it and don't have to do the things I don't want to do. I might, hand that out to someone else to do it. I might hire someone to do it. So it really gives you a lot of freedom. But having these option wheel strategies that can be pegged to different levels, it really has brought in a lot more income for me. So I've been really surprised how well it's worked out. So I'm going to in the next part of this video, I'm going to go into a little bit more detail talking about those and why I did it and some of my other strategies that are also real safe. So let's jump into that next section. Now with the option basics for my option wheel strategies, if you think about it, if you're out buying stock, one alternative to buying stock directly is to sell what's called a put. And you could do it as a cash secured put, which I do recommend, meaning you have enough cash to pay for it. And then once you do own it, if it gets assigned to you, then you can jump in and sell what's called a covered call. It's covered because you already own the shares. They have already been assigned to you. Now, if it's not assigned to you, meaning the put is not assigned to you, then you can keep each month selling another put on that particular stock or ETF. And you can kind of keep doing it. So in a way, it's not so different than just buying a stock. But because just the nature of selling a cash secured put, you're coming in at a lower strike. So if the stock is $50, you may be selling the put at 45. So just by the nature of it, you're potentially saving money on buying stocks, and in the process you're earning premium on it. It's crazy in the sense that someone will pay you premium for the opportunity to sell you stock. And then when you sell the covered call, meaning you've already owned the shares, they've been assigned to you, and you sell what's called a covered call, people will pay you money to have the opportunity to buy those shares from you. So they might say, I want to own Coke at 75. It's currently at 70. I'll pay you $1 for that opportunity per share. So it's really crazy. And if you're picking stocks you really want to own and you have a fair amount of cash, it's really not that risky. Now, some of my wheel strategies also have what's called vertical put credit spreads. And that's primarily because I do suggest to people with the market so high is to buy a put, buy that protection. So what you can do is say, you're looking at a put at 65, look at 55. What does it cost to buy a put at 55? Meaning you can put those shares to someone else. So you're limiting your risk because you can put those shares to somebody else. And a lot of times it can be dirt cheap. So it makes a lot of sense to buy them, especially if they're like $4, $5, $6, $8, $10 per contract, then it can be well worth it. So, and then some of the other safe strategies that I do use are more vertical put credit spreads. I like the 45-day. So you go out 45 days and you do what's called a 15 delta. And those have been very consistent. They seem to win most of the time. With ETFs, I've never had one go against me with ETFs. So that's another strategy that works out really well. And I decided to incorporate it into one of my wheel strategies. But again, we'll talk about that at the end of the video. So next, let me talk about the cash flows, all the different types of cash flows. It's pretty amazing. What's amazing with trading options is the fact that you have lots and lots of cash flows. You have cash flow from selling calls, from selling puts. You might also have cash flow from dividends. I like to use Fidelity for most of my puts, so I also earn really good interest. Right now, I believe it's like 4.15 at Fidelity on any of the cash that's sitting there. So I might have the cash dedicated to a put, but then I'm also earning 4.15%. So that ends up being quite a bit of cash flow. Now, I also, in my budget, what I call my income budget or my income retirement budget, I include all those different types of income. So I've got the premium, I've got the dividends, I've got the interest. I also have areas for Social Security. And if I want to continue to work, maybe on a part-time basis like I am now, or even if I want to earn like the 4% rule, if I want to pull out some cash, maybe 4% on a yearly basis, I also have a section for that. So, and I do believe in the 4% rule. I think it's a good standard to use. I don't know if you should, base your retirement off of it, but I do think it does make a lot of sense. So at this point, let's actually jump into the next part of the video. Well, I'm going to share with you my retirement budget as well as my option wheel strategies. I won't go into detail about my trades and my option wheel strategy, but you'll be able to see how much you can actually bring in from doing these kind of strategies. So stay tuned. Let's jump into the next section. Budget and income spreadsheet. I've been working on this for a while, so I've made improvements and changed it over time to better work with what I need. So on the left, you actually have my household expenses. I won't go into detail, but it's something I use. I update it probably on a monthly basis, and it's pretty accurate. I spend about pretty close to $7,000, 68.28 on a monthly basis. Now on the right is, these aren't my true accounts. I wanted to show that you could do this with 250,000. So one is it would be like the taxable account, how much cash I have in my brokerage, which would be 60. And then on that, it would bring in, I would cash of 10,045, and then I would also have taxable dividends around 1,500. So that's based on my actual account. So I just broke it down. It's about a fourth of my regular brokerage. So that's how I set it up. So for this type of account, you could potentially earn 1,500 in dividends, and you would have taxable cash, which would be an emergency. If you had an emergency, you would have the cash available. And that's one thing I forget to mention in a lot of these videos. By trading options, I always keep a lot more cash than I did before. So actually, I have a lot more cash for, emergencies or an emergency fund. Just kind of one of the byproducts of trading options. So, and in Fidelity IRA, so I'm looking at 140, and then IRA and Roth cash would be about 58,600, and that's used to calculate, interest at 0.415%. And then Fidelity Roth would be right around 50,000. And then, so what I'm showing here is the taxable interest. This is what the small account, would pay interest wise, then dividends 125, and then taxable premiums based on a 1%. I make less in my taxable account primarily because I do cover calls more so than puts, but I am changing that. I do believe it may go higher than 1%. And in Fidelity, it would be a lot more interest because it's 0.415%. And in Fidelity premiums, you've got 2.5%, which is almost 4,000 on a monthly basis, which, I tell people it's usually between 1 and 3%. In this case, I'm using 2.5%, mainly because of my wheel trades, and I'll jump into that next. I have that open. Like I said, I'm not going to go into detail about the trades, but here's the 10,000 wheel where I've done 3 trades in the last 2 months. Then I have the monthly wheel trades, which, let's go back to the top, where you can see I've been doing it since October and making on average about 1,030 on a monthly basis on an account that's around 25. Then I've got the spread wheel trades, which is accounts between 50 and 75, and I've been doing that for going on 4 months and making about almost 1,900 on a monthly basis. Now, if you combine all these, which is around 105,000, which again, we're not getting to the 250, I'm making about 3502.63 for the 3 accounts, which ROI on required capital is 5.7%, but on the basis of the total account, and I'm calling that the assigned capital, it's like 3.31. So even though I use 2.5% in the spreadsheet, I've actually been able to do a little bit better. And then yearly ROI using that 3.31% is like a 40% return, which rule of 72 would put you at doubling that account literally at about 1.8 years. So you can see, and these are all actual trades, and I'm not even done with February, so the monthly could be even higher. So now if we go back to the other spreadsheet over here, you can see the 3958 is based on the 2.5%, which again, it could potentially be higher. I could put it at 3.1, but here I put 2.5. And then dividends that I get from those accounts. And currently I have a lot more cash in my IRA. So I'm basing these off, my IRA and then apportioning them accordingly. So, and then part-time work, I play here that, I am working. This is potentially what I could be making, working very part-time. And then I could potentially bring in some money for the 4% rule. Now, I do have a link. This is at the top. You'll see the 4percentrule.com, my favorite site for working with the 4% rule. If you've never looked at it, I encourage you to take a look. But that's where I came up with that number of 633. So I'd be making 7,095, which would cover my current budget with a little bit in excess. And then, when I reached full retirement age and then I got Social Security, I'd have plenty of money at that time. And I am basing a little bit of inflation on here, but I would be bringing in an extra $981. Now, again, I'm basing this on 250. My accounts are more like double this, and I'm able to, pretty much meet my budget. Um, and that doesn't even include the work that I'm doing in my business account. So it's pretty impressive how, when you add in the premiums, it can have a major impact. Just for these two accounts is about 4,400. And like I said, my current goal is 8,000. I didn't quite make 8,000 last month because I did get the flu and got fairly sick. This month, I should do probably around 82, 8,400 or something along those lines. So it's definitely doable. So that's what I wanted to share with you guys. This is how I budget. I do share this with my membership. When I post this video to my membership, I'll share both of these spreadsheets again so people can have access to them. But it's worked out really well for me. I can set goals, and then as I set the goals, I can adjust here with the type of trades I've been doing. Like even with this recent Zoom trade, I did 3 contracts, and even with Mara, I did 3, and mainly because it's worked out fairly well, and it's worth taking a little bit more risk, and I can earn a little bit of a higher premium, 367 for that one trade. So let me know what you guys think. Are you doing something like this? How are you actually budgeting? Let's go back to the budget worksheet. Are you doing something similar to this? Or are you using, a tool that you purchased, or, maybe an online tool that you use for budgeting? How are you identifying your different income streams and, you know, including Social Security, and then maybe something along the lines of the 4% rule? Do you have something like this set up? And as always, thanks for tuning in and taking the time to watch the video. I look forward to seeing you next time.